Are you happy with your credit score? I know I'm not. I'm always trying to maintain a good credit score and to find ways to improve it. And how about those occasions when you see your credit score drop? It drives me crazy trying to figure out why. In this episode of the Latino Business Report, we get credit score tips from Jorge Hernandez, owner of Watermark Credit Solutions. Having a good credit score can help you qualify for lower interest rates on loans, credit cards, and other financial products. It can also help you get approved for rental housing, home mortgages, and other loans. Having a good credit score can save you a significant amount of money and make a difference in your quality of life.
Welcome to the Latino Business Report. This podcast covers business, people, and issues of the day from a Latino perspective. The Latino Business Report is brought to you by TAMAC, the Texas Association of Mexican American Chambers of Commerce. TAMAC is the leading Hispanic business organization in Texas since 1975. Now for your host, J.R. Gonzalez.
And welcome to another episode. Today we have with us Jorge Hernandez. Jorge is down in the Low Rio Grande Valley. He is the owner of Watermark Credit Solutions based in Pharr, Texas. Jorge, how are you doing today?
Hey, I'm doing great, JR. How's it going?
It is going great. Jorge, thank you so much for making the time to be on the show. There's one of the things that I definitely have a lot of questions myself, and that is credit scores, and that's what we're going to be talking about today. In today's episode, we want to talk about credit, understanding it a little bit, some of the common mistakes people make that give them bad credit, and more important, how can we fix that credit? Now, I know, Jorge, you've been in the credit industry for about 16 plus years. You have a successful business in helping people repair their credit. Before we get into that, Jorge, can you tell us a little bit about what are some of the common mistakes people have in causing bad credit, and how many people out there actually have good credit in the country?
Sure. Well, let me tell you something. Every time I have customers coming into my office, I don't know if they're following a path that everybody has the same common mistakes on why do they have bad credit. But one of the common mistakes, I'm gonna give you. There's a lot of mistakes that people do, but I'm gonna shorten that to, let's say, 10, and I probably throw one more on it. But the number one common mistake that people make is whenever they have their credit cards, guess what? They max out their credit cards, and that's the first thing they do. I know customers or people that have, let's say, $300 credit card, and the first day they get the credit card, they max out the credit card, thinking of that's money that they have, and that's the first mistake. Yes, that's the biggest mistake people make on having that maxed out credit cards.
When you have a credit card, what should be your percentage of the card that you actually use before you start getting in trouble?
Well, the ideal usage on a credit card, it's no more than 30%. We want to keep it between 10 and 20% in order for you to start picking up your credit scores or gaining points every month. But if people use it above 30%, they're not gonna be gaining much points as if they will be gaining whenever they have less than 30%. Once you max out your credit card, saying that 70% or more, that's when you start losing points on your credit card. Not just being stabilized, but losing points on your credit report. So keep in mind that keeping up the credit cards below 30%, that's the best thing to do whenever you have a credit card.
Okay. Number two, what would be another one?
Well, number two is making late payments on their credit cards on their payments. People think that by having a late payment on their auto loan, on their credit card, on their furniture store, late payments only credit bureaus only report late payments after 30 days being late.
Okay.
People think that customers think that whenever their payment is, let's say, I want to say on the 15th, it's due on the 15th, and they make a late payment 33 days after, saying that they make their payment on the 18th because they got paid on the 18th. A lot of people think that they're gonna get reported to the credit bureaus, but guess what? They don't get reported to the credit bureaus. credit bureau only reports 30-day, 60-day, 90-day, 120-day, and 150-day late.
Okay, so
So
if you're
therefore,
if you're 4 or 5 days late on your payment, it's not going to get reported. Now you may
you will
get
not
a
get a
you
hit
may
on
get
your
a
credit
late
score.
fee, but you're not going to get reported to the credit bureau.
That is correct. Yes. You will not get hit by any points on your credit score.
Good
Only
to know.
like late fee. And a lot of companies, they have around 10-day grace period for you to make the payment. Others have 3, 4, 5. So it all depends. You gotta check into that late payment fee whenever it kicks in on any time you make a credit or anytime you sign up for to make payment plans.
Okay.
So it is gonna show there.
What next?
Well, one of the next things is keeping up with too many credit cards. Customers think that the more credit card they have, the better their credit is.
And we'll see. And that's what I've always been led to believe. The more credit cards you have, the better your credit score is going to be. So that's not true.
That is not true. That is not true. What we do see, or as a financial institutions, we want to give you credit cards because financial institutions want for you to get into debt right away. So it's very easy to get into debt by having a lot of credit cards. So
I see.
it is always recommended for you to only have at least 3 credit cards. Uh, you don't need more than that. You don't need to have retail credit cards, retail store credit cards. You don't need to have a Home Depot credit card. As long as you have a credit card that it's 0% interest or a very low interest rate, you can do well on that. But you don't need to have 10, 15 open credit cards because that's just going to affect your credit score. And one of the things by having a credit score, the credit report is it's divided into five. I want to say into five different pieces. If you have a pie or a pie chart, it is divided into 5 pieces. And one of the pieces there on having type of credit, that's 10%. So having a lot of credit cards, it's 10% of your credit score. So the more credit card you have is gonna hit on your credit score about 10% of the whole five factors.
Okay.
We want to call them factors.
So you're saying 3 or 4 credit cards is all you need. You don't need to have 5, 6, 7, and the retail and the Home Depot and the J.C. Penney and the gas card and the airlines and all that stuff. Okay.
You don't need a lot of those. Only 3. It's recommended between 3 and 4.
Okay.
Okay, and like I said, the next common mistake it's co-signing for a loan. Okay, whenever you co-signing someone for a loan, that means that the other person could not keep up with their payments or could not make their payments on time. That's why they have bad credit. So if you co-sign for them, what's gonna happen? Is it gonna better your credit score? It's not gonna better up your credit score, but you're gonna have another debt that you are
You're going to be
saying that
responsible.
if that person cannot be responsible for that, you're gonna be responsible for that debt. Common mistakes that people make or customers have whenever they co-sign on their son, daughter's first car after they graduated from high school. We're not saying out of college, but we're saying out of high school. Is that they want for their son to have a very nice car to go to college.
Mm-hmm.
And what they do is either they co-sign for the son or for their daughters, or they get the car for that person or for their son or daughters. That's a common mistake they do. What I think it is a better off instead of their getting them a new vehicle or a high end vehicle, they can start showing their son or daughters how to maintain a good credit score or teaching them about having a credit score. And the best thing for them to do is adding their son or daughters to a as an authorized user on their credit cards, on 1 or 2 of their credit cards. By doing that, they're gonna pick up their credit score from 0, I want to say, to above 600 credit scores. So let's say, for instance, um, I want to sign up for my daughter's car. Well, you don't want to do that because your daughter is not gonna have a good credit score, but yet you're gonna sign off or co-sign for a debt with a high interest rate. So what you want to do is helping boost up their credit once they turn out to 18 years old, or you can start their credit score whenever they're 16 years old. So you can start boosting up their credit by adding them to your credit cards as an authorized user. You start.
I didn't know you could do that.
Yes,
so you could have a son or a daughter or somebody as an authorized user of your credit card, and then they're taking advantage of your score until they're fluent, until they're on their own. And of course, then you can keep an eye on them since it's your damn card. It's kind of like
right.
Okay.
Whenever you don't have any credit score, you can. Everybody can start with a secured credit card by you putting $200 minimum on the bank that it's giving you that credit card, and of course you've already paid for that credit up front. That's why it's called secured credit card. And what happens is you pay for that secured credit card, and a lot of people think that because they've already paid that up front, they can use all the money. But no, it's just like a regular credit card, so you don't want to go above 30%. But yet they've already have your money just in case you don't pay for that.
Right.
So that's how everybody.
So if you fail to make a payment on a secured credit card, that counts against your credit score.
Correct.
So it's just because good point. Just because you've already paid for it up front doesn't mean you're not going to get a ding or a hit on your credit score. If you have a secured credit card, make the payments on time, build your score. If you're late or ignore it, then you're still. Okay.
You're going to get hit on your credit score, yes.
Good
and that's one of the things that I always recommend every single dad or parent out there, that if they have kids that are going to high school, might as well start adding them to their credit card as an authorized user account. That way they can start building up their credit. Once they graduate, they can get their own credit card, and they don't even have to go through a secured credit card. They can always go to an unsecured credit card after having having at least 2 or 3 months as an authorized user of the credit cards. But it helps a lot with teenagers that are going into college.
And how about these cases? Like I remember when I graduated from college, I didn't even apply for it, and I get a credit card in the mail going, "Here you go, congratulations, graduate." To me, that was
a $300 credit card.
Monday? What?
I'm sorry? It's a $300 credit card that you always get in the mail.
Yeah, that kind of got me back in those days. I kind of learned the hard way.
I think everybody, all of us went through there. I got my first credit card when I graduated from high school, or before I graduated from high school, when I turned 18, and I got my first credit card. In fact, they gave it to us there at the school. And I mean, if you're 18 years old, you're about to graduate. There's coming spring break. I mean, and you have $300 to spare with a brand new credit card. So you're gonna max out your credit card in the first spring break that you get. So that's one of the things, JR, that there's a lack of education on students on getting their new credit cards, or students on getting their first credit card. They don't know how to use it, and that's how they make their mistakes right off when on their first credit card, because they're not educated.
So what other tips do you have of how to avoid getting into a bad credit situation?
Well, the other one is getting a credit card or a loan that you're not ready for. It's like going to, let's say, Academy or Walmart, and you're paying on the cashiers on the counter, and they ask you, "Do you want to apply for a credit card?" You get 10% down right now. And guess what? 10%, if you're buying $1,000, or let's say $500 on merchandise, and you're getting 10% off, that's $50. So who doesn't want to save $50 on their purchase, right? So you apply for the credit card, and guess what? You obtain a credit card that you were not ready for, or you were not planning on getting that credit card. So that's some huge mistake people make. So every time you go to different stores, as far as let's say Target,
they give you that offer, or go into a Cabela's or something. I've seen it.
Yeah, that's the
people are always asking me, would you like to save money and apply for our card? I go, no. I go, you don't even have to be approved. Just apply for it, and we'll give you the discount.
Yes, as long as you apply for it, they're gonna give you a discount. I've seen stores that even though you don't apply for that, you don't get approved, you still get 10%. But if you get approved, you get 15 or 20%. So that's tentative, going to the stores and applying for credit
Yeah,
cards.
then they get you
But
that
you're not
interest rate on the other
waiting.
end.
Hmm.
Okay.
Yeah, so you're not saving $50.
So in other words, you're
You're
saying if
getting
you're not
a
ready,
lot more.
if you're not looking for a card and somebody offers you one, it's probably best just to pass it up.
That's it. Yes,
You
you don't
don't
want to
need
save fifty
because
dollars.
you said you only need 3 or 4 cards anyway.
That's it. Yes.
Okay. What else you got for
Yes.
us?
And also the huge mistake that I find out there, that people don't wanna don't they get to a point where they open their wallet or their purse, and they see 20 cards there, and they don't want to have all that debt, and they just called in to close their current credit cards because they don't want to have that debt. Well, guess what? Whenever you call to close a credit card, you're gonna lose on credit history. You're gonna lose on open accounts, and you're gonna lose on by closing the accounts.
So
So
all
it's
that.
not just closing a debt; is closing a debt, but you're losing all that history that you make within that credit card.
Okay.
And guess what? Whenever you get right now, that we're talking about the $300 credit card that you get right after high school. If you maintain that credit card when you were 18 years old, that's when the people that have 800 credit score, that's how they have their 100 credit score, because they imagine having a
A
credit card
history.
history since you were 18 years old until now, and you started with a $300 credit score, and now you have about 30,000, 40,000, $50,000 on that particular credit card. So that's a huge, and people don't apply for, instead of you applying for different credit cards every 6 months, if you need more credit, you can always call your credit card company. Let's say, for instance, the first one that you got for $300, ask them if they can increase the limit, and they will increase the limit on that particular credit card. So there's no need for you to be getting different cards, okay?
Okay.
But you can get that increase on that. So don't ever close any accounts on that card. If you just wanna just tear the card apart and just throw it, or put it on a shredder, and but you
Don't
don't
officially
close that
close
account.
it.
Yes.
Now, Jorge, let me ask you this. I've had some credit cards that I haven't used in years. Will they ever close them on you if you don't use them?
Yes. Yes. Huh?
And that's probably not a good thing either. So is it smart to maybe occasionally, if you don't use it for a while, make a small purchase on it and pay it off, or just to keep it active?
You always want to do that. Yes. It's kind of fishy there, because if you don't use a credit card, they'll close it on you, or if you don't use it, they'll lower your limit on that.
Your limit,
But
okay.
you always want to keep a very good credit score. That way, they're never gonna close the account to you. If your credit score, if they issue a credit card whenever you had a 780 credit score, let's say they gave you a credit card for, I don't know, a Mastercard, and that was issued to you when you had a 780 credit score, and now you have a 650 credit score. Well, guess what? Now you're not on the parameter of a 750 and up credit score. You went down one step below. So they're gonna notice, and they're gonna say, okay, well, we issued a credit card with to Jorge when he had a 780 credit score. Now he has a 650, so he falls on this bracket. So bring down his limit on this card. So anytime the company brings
Bring
down
down the
your
limit and possibly increase the interest rate too, I'd imagine.
that is correct. Yes. Well, the interest rate, I don't think they don't. There's only a few credit cards, but the limit, it'll get decreased. Yes. So by decreasing the limit, guess what's gonna happen to your credit score? It's gonna drop.
There you go.
Because you shortened your credit limit.
Well, Jorge, this has been great in me better understanding just how this whole credit thing works. I mean, do you have any other tips on how to improve it? And then I want to talk about, if you have bad credit or if you want to improve your credit, how can you do that?
Well, one of the things that I wanna mention to everybody that is listening is, do not ignore your credit report. You always have access to your credit report one time per year, and you have access for free. You don't even have to pay for that. It's not You're not gonna get a hit on your credit report. So always get a free annual credit report, and make sure that everything that they are reporting on your credit report, it is correct. It is 100% accurate. If they are reporting your name and there's a letter missing or a letter inverted, that's erroneous information. So you don't want that on your credit report because it's going to lower your credit scores. Whenever you up,
Make sure the address, your date of birth, the name,
everything
the
is
spelling
correct.
of your name,
Everything is
everything.
correct. Yes. Do not ignore your credit report. Always make sure what you have on your credit report it is correct. So a lot of people ignore it. They don't even see their credit reports within years, and by the time they go apply to a mortgage company or to a dealership, they get their credit report and they say, "Well, I don't know. I didn't even know that my name was misspelled, or I didn't even know my job employer name was wrong." So those are little things that I encourage everybody to check on their credit reports every single year, once a year at least, so that you can have a 100% accurate credit report.
Okay. Jorge, what is considered a good credit score?
Well, to consider a good credit score, there's a different charts or different scores, but the highest credit score it's 850,
Okay.
and only 1% of the population in the United States are in that particular category. But in order for you to apply for a mortgage company, you can have a 580 and still apply for a mortgage company. But if you have above 620, you can take advantage of the programs out there by having a 620 credit score.
Okay. So
Now,
having a lower credit score doesn't mean you can't obtain credit. It just means that you'll probably be paying a higher interest rate, or that money's going to cost you more.
yes, you can. You're probably gonna be paying a high interest rate, and at the same time, you're not gonna be eligible for the programs that are out there, like first-time homebuyers, teachers. There's a lot of programs out there. So the better your credit score, the better your chances are of getting a very clean and nice, sharp loan out there. For example, between 300 and 579, it's a very poor credit. 580 to 670, it's a fair credit. 670 to 740, you have a good credit score. 741 to 799, it's a very good credit score. Above 800, you have an excellent credit score.
Got it.
So you always wanna be above 800.
Well, we just won't talk about where my credit score is right now, but okay. Good, good to know there. So, let me ask you this. I've heard before, and tell me if it's true or not, that your credit score affects other aspects of your life. I mean, I once heard that your credit score can actually affect the insurance rates that you're paying on your car.
Yes, it can affect your insurance. It can affect your job employment. People that want to go work for the government, as far as U.S. Custom, Border Patrols, FBI agents, or work for the Secret Service, or anything that has to do with the government, they check your background. Even if you go to Air Force, Army, all of that, they check
All the
your,
military services.
yes.
So they
Uh-huh.
check your credit score when evaluating you, whether they want to hire you or not, or bring you on board.
Yes, and I believe they look more into your credit history than your credit score. So because everything is discipline, going into the Army, Air Force, Navy, it's just discipline. So they want for you to be disciplined, and that's the way they basically check. In fact, I have a few customers that are in the Navy, they're in the Air Force, and some of them are in the Navy SEALs. So we're trying to get their credit
Oh,
fixed as far as
okay. Their
helping them
scores up a
get
little
out of
bit.
it.
Their history. Well, let's
That's
talk about
correct.
that. How does a person improve their credit scores, or their? I mean, history is history. You really can't change that. But what can they do to improve their credit scores and make sure that they're not in that lower end that's costing them high interest and maybe losing out on some opportunities?
Well, the best and simple way to start increasing their points or better to better their credit reports. The first thing is I always tell customers get your free credit report and check for any errors on your credit report. Even though from your personal information, job employment, address, sometimes whenever you're doing an application online or over the phone, they have their address misspelled. You have they didn't put your suite number or apartment number. Any little thing that you can fix, it'll improve your credit score.
Okay, well, let me
Uh,
let me ask you: how can a misspelled name or a wrong address? How does that adversely affect your credit score?
because technically everybody has a first name and middle name. So whenever you apply for credit and your name is spelled correctly, you should always have that same name. In case, let's say you have a suffix as junior, and you don't want to put you don't put the junior as a suffix. If you're a junior, guess what? You're gonna have two names on your credit report reporting on your credit report. So the more names you have reported in your credit report, you're gonna lose point on that. If you have your name misspelled, not just you're not gonna have two names. You're gonna have three names, even though it's a misspelled name, but you're gonna have it there because you didn't correct that misspelled name on your credit report. So any errors on your credit
Okay.
report, it can be a hit on your credit on your
Because
score.
if you, instead of one person, you're now two or three different people, and all that information is okay, I get it. All right,
Yes. Uh-huh.
good
So
to know. So make sure
yes,
you make sure your information on your credit report is accurate and correct.
that is correct. Yes. Uh huh. Now, one of the things that you can do, another thing that you can do to improve your credit score is pay down your balances, as we talked about. Pay down your balances to below 30% on your
Wait,
credit
wait, wait,
cards.
wait, wait. You mean once I borrow the money, they actually want it back?
Yes. Well, technically, JR, let me tell you something. Literally, we think that having credit cards, we think that that's extra cash for us, or we think that's an extra income having in our pocket, and that is not true. I always tell customers that having a credit card is for you to pay. Let's say, for instance, you want to go to the store and you forgot your wallet, but you have your credit card there. Well, use it. Or if you want to buy uh, plane tickets, or if you want to, for instance, you have an emergency, you want to use that credit card as an emergency. You don't want to use that credit card as an extra income, because doing that is gonna affect you in the long run, because you don't have that extra income. You have that extra debt, so you don't have that income.
And how about these credit cards, Jorge, that say use this and get cash back? I mean, what kind of? I mean, people. Oh well, look, I'm getting all this cash back, but to get the cash back, you got to be spending a lot more money than that. So you're actually getting
Right.
yourself deeper and deeper.
And by the time you want to get cash back as 1% or 2%, you've already spent 10, 15 times more than what you're getting back. So that's just a little gift that they're giving you for you to keep paying them interest on that credit card.
Got it.
So you're not getting anything back. You're just saving a little bit of money of what you've already paid them.
Okay. So, so how else can a person improve their credit score?
Well, and one of the things is, if they have collection accounts, they might want to call the collection account and start making payments on that collection account, because that collection account, um, customers always think that there's a 7 year period where after 7 years that account is going to be wiped off of their credit report. That is not true. The time frame of a company to report a collection account on the credit report is 7 years and 6 months.
Okay.
But what happens if they sell that account to another collection company? Well, that other collection company can report it for 7 years and 6 months.
Ah.
1 year down the road, that other collection company sells it to another collection company. Well, guess what? They can report it. So technically, an account can be there for your whole life. If you don't take care of that, it's gonna follow you through and start. And every time they sell that collection account, it's gonna affect your credit score. So if you have a collection account that it is erroneous,
Mm-hmm.
uh, you can get that account. I don't want to say delete, but you can take care of that account if the collection account is not following the FDCRA, which means the Fair Debt Collection Reporting Act. In order for them to report that account into your credit report, they have to follow the law. If they don't follow the law, well, you can dispute that account to get removed, because they're not disputing the correct information. So there's a lot of things that you can do to get those collections out of your credit report by either by
Okay.
paying them, make payment arrangements, but try to
And sometimes those
to
guys will take,
that account as
50
collection
cents on the
account.
dollar or something just to get rid of the paper, right?
Yes, yes. So
So I
you
get,
always want to resolve those collection accounts.
so I guess I better go back and find that Columbia Clearinghouse and all those records they sent me that I haven't paid for yet. Okay. Okay.
Yes, you might want to do that. Yes.
All right. What else we have, Jorge?
Well, one of the things is if you don't have any credit at all, like I said, how is that you can improve your credit, or how can you start a credit with whenever you don't have any credit? Well, the best thing is for you to do is get a secure credit card.
Okay.
Pay a secure credit card. Start reporting your credit report, or start working on your credit report score, so that you can start your credit score history. So you always want to get a secure credit card to start off and launch your credit score by doing that. Once you start doing that, using your credit card at the beginning, and you use it the right way, like we've talked about, then you're gonna be getting a lot of offers. But you need to know what credit card you want to use.
And be careful with those offers.
That is correct. Yes.
Okay.
And one of the things that I wanted to mention on doing that, I want for everybody to know that having bad credit, that doesn't mean that you're done with your life. You can always go back into track on getting good credit. And one of the things that, like I said, by opening credit cards, by making late payments, one of the things is a credit report. It's divided into five factors. One of the factors is getting new credit. Getting new credit impacts your credit score 10%. Length of your credit history. The more credit history you have, the better your score, and that gets a hit on your credit about 15%. So 15% of your credit score is based on the history on your credit report, and the amount owed on your credit score, it's 30%. So the more money that you owe, can get hit on your points on your credit score 30%, or it can benefit you 30% based on the whole on your credit report. And best of all is your payment history. That it has a 35% effect on your score. 35% of your percent on your credit report, it's based on your payment history. And last but not least is the type of credits. We always want to have at least two revolving accounts, one or two installment accounts, and like I said, having two, three credit cards. That's a revolving account, so you don't want to have a lot of
Okay.
credit. But those are little things that you can do to have good
Very
credit.
very quickly, Jorge, what's the difference between a revolving account and a
Installment.
installment account?
Okay, installment is whenever you get a loan and it's by installment. Let's say, for instance, a auto loan.
Okay.
You're gonna pay an auto loan into 72 installment payments, which is 6 years, 7 years, 8 years now. A revolving account is a credit card where you have a credit card for $5,000 and you pay those $5,000 back. Guess what? You have $5,000 to spend again.
Okay.
So that's a revolving account.
All right.
So by having that, you always want to check your credit reports, and you always want to have no more than, like I said, 3 credit cards, 4 credit cards, so you can be on the right path.
Jorge, we're almost out of time. Thank you for joining us. Ladies and gentlemen, this has been Jorge Hernandez. He's with Watermark Credit Solutions. He's experienced in this area, been doing it for about 16 years, and he's from the Lower Rio Grande Valley in Far, Texas. However, Jorge can help you just about anywhere you're at. And what we're going to do in the podcast notes, Jorge, we're going to go ahead, with your permission, go ahead and put your company information and name, so if somebody's interested in contacting you, or if they'd like to talk to you more about possibly fixing their credit or what you can do for them, we're just going to go ahead and then put that for you. But before we go, Jorge, is there any last words you'd like to leave of advice for the listeners out there today?
Yes. Well, first of all, thank you for your time. Thank you for giving me the time of showing a little bit of what is the credit report. And definitely, anybody that needs help on improving their credit score or getting out of debt faster, I'll be glad to help them out. One of the things that I wanna encourage everybody to check their credit report once a year, at least,
At
for check
least.
for any errors on the credit report. Yes, do not apply for credit. If you don't need that credit card, do not apply for that credit card. Make sure whenever you go to Target and they say that you're gonna get a free teddy bear because you apply for a credit card, you don't want that teddy bear for free. It's better off buying it from the store than getting it free from Target. So thank you for this time, Jr. And hope everybody learns a little bit from this podcast.
Definitely. I know I've learned a few things. Jorge, once again, thank you very much. You've been listening to the Latino Business Report. I'm your host, J.R. Gonzalez. You can find the Latino Business Report anywhere you listen to podcasts. Also, we have a new website that's about to launch. You can find us at latinobusinessreport.com. You can also find our entire library of episodes on YouTube under the same name. Folks, thank you very much. And Jorge, once again, gracias, amigo, and we will see you next time.
Thank you.